Oil modestly higher after spiking overnight following Israel's limited strike on Iran, and energy was one of the top sectors in today's session. Joining us now is Bob McNally, Rapidan Energy Group founder and president, and a former White House energy advisor. It's great to have you on the show. I mean, we can talk about the fact that WTI finished up slightly today. However, we are lower on the week, and going into this week, if you had told me that would be the dynamic, especially 12 hours, call it 18 hours after Israel conducted a counterstrike on Iran, limited in scope though it was, that this is how we would be ending the week, I'd be pretty shocked, especially as we reimposed sanctions on Venezuela. I guess just walk me through how much geopolitics is or isn't affecting the energy complex right now.
Hi, Morgan. You know, you're right. I think it's fair to say the market has been skeptical about geopolitics really impacting oil prices and so forth. You know, there have been a lot of head fakes. The Russia invasion in 2022, prices soared because everyone expected a disruption. Didn't happen. They collapsed. Even the Iranian attack on Abqaiq on September 14th, 2019, short-term event. So the markets are sort of in show me the barrels mode. Now, that being said, when Israel attacked the facility there near the Iranian consulate, Iran contagion risk did start to come back into the market. But as you said, when we had an aggressive but ineffectual Iranian attack, and then last night's limited attack by Israel, we didn't see barrels disrupted. We didn't see tankers stopped. And I think the market's inclined to say, I'm just not going to believe this until I really see it. And I'm not sure there's real cause for alarm or risk. Venezuela is pretty small in terms of the barrels and so forth. It's really about Iran contagion risk. And the market's in the view of like, you know, I'm just not buying it until I see it. And so far, we really haven't seen it. OK, so then what is moving the price of oil here? How closely should we be watching, for example, U.S. producers when we're at record highs in this country, even as OPEC continues to hold steady? So I think what happened is the fundamentals are firming up. Like fourth quarter last year, pretty ugly. Inventory drops didn't happen. This year, demand's pretty good. The macro was looking pretty good. China was looking pretty solid. Inventories are declining. So this is a market that's pretty well supported. OPEC Plus is doing its job. So we're pretty supported here in the mid-80s, low 90s. Now comes geopolitical risk. In our view, there's at least another $10 to $12 upside of just risk that needs to come in the market and likely will. But again, the market, it puts it in. We were up $3 initially last night on the Israeli attack. When the market saw nothing, it came off. So I think we have a well-supported market here. It's not too bad for macro, but we have an upside risk when we think, because we think this escalatory dynamic remains in place. It's not going away. And this will cycle up, and we think that there's more upside to crude prices than downside.
So, Bob, outside of geopolitics, then, what's going to move the price of oil?
Well, one thing that's going to move the price of oil is the great debate about demand. I mean, the huge debate among barrel counters is just how strong will oil demand growth be? You've got the International Energy Agency saying it's going to be on the low end of the range. OECD is about to peak forever because of EVs and so forth. You've got OPEC barrel counters saying, no, demand's going to be twice as fast in growth than IEA says. We'll see who's right, but there's an enormous debate over the pace of demand growth, which is partly a macro question. That'll depend really on whether OPEC Plus increases supply or not on June 1. So in my view, it's not so much a supply story. Last year, it was the U.S. production was higher than expected. True. This year, not happening. This year's debate will be about demand and geopolitics. That, I think, is the next $10 to $15 in crude.